Welcome back to another episode of my trading vlog, where most of the views come from return subscribers. If that's you, I'd appreciate hitting the like button. If not, consider subscribing. I'm going to go through my top 5 stocks today really quickly. I'm trying to get into a new routine. You know, I've got a new job, so my schedule has changed. I have to make these videos during market hours. It's a little awkward for me. I gotta find new time to my analysis, but let's just get going on AMC on the hourly chart. We've obviously had a massive downtrend, and we're now in a reactionary bounce. I'm going to show you what I've been counting for the last while, and that's been since that high we found at 780. We'll call this a peak MOAS hype moment. We've had a massive downtrend, and just from that initial impulse down to 496 and that bounce, I was able to use the Fibonacci extension tool to target 327, and the price did reach that target. What generally happens after you reach the end of a corrective phase is a bounce, a reactionary trend, and that is exactly what we're looking at. Who knows how high it's going to go? Well, I'll tell you what, generally, the RSI will hit overbought, oversold at the end of a corrective trend. And since this is a corrective uptrend, we're looking for the RSI, the relative strength index, to hit overbought. That is to say 70. The RSI is an oscillator. It takes the price and reflects it as a percentage. And that percentage is based on the moving average. Here, I have it set to 14. And so basically, what you're doing is you're just measuring how far the price has moved. Okay? Anyway, volume here is starting to pick up a little bit, and honestly, with Ape in the mix, it's just a really weird thing to look at. It really is. Let's see what Ape is doing. Ape is climbing still, and this is also very curious. You can see this is almost an inversion of AMC. Until recently, when we see the price rising, not really sure what's driving that. There could be some more hype. Probably hype. I really do expect AMC to drop long term, but when share dilution occurs, that really could lead to a little bounce because it's going to improve the balance sheet. But again, it's just buying time. It's possible that we'll get better earnings in the future, but we're going to need to wait for those earnings to appear. I'm not going to speculate on it. Currently, I'm not trading AMC. I'm also not trading GameStop, but I'm still following it, and I've actually updated this chart a little bit. There was a big push down from about $27.50 to near $23. This is an impulse wave, and I measured that impulse against the following reactionary trend, and I came up with a target at 1810. Since then, we've seen price grind sideways and start to push down, and for the last while, I've just been following this downtrend, kind of just scooching my C count wave here for a while, and I haven't done a count, so I went ahead and updated it, and I added the wave count. There's 5 waves in a C wave, and it's common that in the third wave of that set, we get another 5 waves for a third wave extension. So follow these blue counts first. You're going to see this push down from the minute wave B, shown in white here, B circle. We have impulse 1 at the minuet degree. And then we have a bounce for minuet wave 2. Now we start the third wave by going down 1 wave degree because the 5 waves of the extension will build into the wave degree higher. So we go down a degree to start the wave extension. We count 1, 2, 3, 4, and I'm pretty comfortable calling this 1, 2, 3, 4 with a 5th wave extension. I know, right? Because the 5th wave can also extend. Any of the motive waves can extend. And the reason why I'm doing that is because of the relative strength index. We typically see at the end of a motive trend reaching the overbought or oversold level. And so here, impulse 1 was pretty close. It doesn't always quite strike oversold or overbought, but it can get close. So remember, the relative strength index is an expression of price as a percent, not necessarily a buy-sell signal. It's not going to tell you where the trend reversals are, but it's going to tell you where the probabilities of reversal are starting to occur. And so we often see those motive trend ends on the overbought and oversold areas in the RSI if your wave count makes sense with the time frame you're looking at. Anyway, so 32.20 here, that's pretty close. Gonna call that oversold. Price bounces into wave 2, and then we have a series of dips in the RSI. Very common to see this in wave 3. And what this does is it establishes that we are completing multiple motive wave counts, especially when we start to get a bullish divergence through here, which we really didn't do, which is really quite bearish, just to see the RSI plunging lower and lower through wave 3. Sure enough, after wave 4, which was this little bounce right here and you can see at the end of the corrective trend, what we do, we hit overbought once. You're going to notice that wave 2 is also a corrective trend but didn't hit overbought. Rather, it came up to about 50. That's the mid mark of the relative strength index, and that typically signals the end of a motive trend as well, or of a corrective trend. Geez, that is so confusing. In a corrective trend, there's two motive waves. And if price is making a larger move down and the averages are going to start stacking up to the downside, then that midline right in the middle of the relative strength index is going to be an important thing to watch. And you can see this all the way across that price, or as price is moving sideways and beginning to drop, it has a very difficult time getting over 50. That is to say, the averages are trending bearishly until, of course, you get to wave 4. We get this strong pop. Sure enough, RSI which is overbought once. It's hard to learn how to read the RSI. It really is. At any rate, the price begins to drop, and again, we're going through multiple wave extensions here, and so you're going to see the RSI reaching overbought here, or to say, as I say, around 30 multiple times, right? And once we get a series like this of 3 or more, we can start to say that we've probably found the ends of waves 1, 3, and 5 of the motive wave that's extending. I didn't do the wave count through here. This is just brutal, though. What I'm going to do is take an extension tool, and we're going to go from the top of the 4th corrective wave. We're going to go to where the RSI is overbought here, which is right here, and we're going to pull up to the end of that corrective trend. And you're going to see that I have a couple of extension tools here. One's at 50%, which I actually want to hide. What I really want to focus on is this 100% extension at, what is that, 1839. Price is currently at 1838. We can easily say that wave 5 could be complete, or just wave 3 of 5. And the reason why I say 3 of 5 is because we may be looking at a bullish divergence here, where price is setting lower lows, but look what the averages are doing. The averages are actually starting to come up and are not setting lower lows. So what that means is that the overall trend is probably coming towards an end, and we're due for another reactionary bounce. And so we could easily see a 4th wave come up, right? And it could be a zigzag like this, and then wave 5. And wave 5 commonly truncates or does not pass the prior low. This would give us a nice 1, 2, 3, 4, 5 count through here, and this would only be finishing the wave degree, or the 3rd wave of the minuet degree. Whew. Which means we still have waves 4 and 5 before we complete this C wave. Which means, and personally, this is what I think we're going to see GameStop move through some sort of broadening pattern down here, but it will serve as a base, theoretically, as long as the 5th waves do not extend beyond the 3rd impulse, which they may. I know, it's not super optimistic, it's really not. Implied volatility here is getting a little high. Typically, implied volatility turns around and starts to produce a counter trend. And I think that has to do with the way that the options markets work. As implied volatility increases, options contracts become more expensive. There's more risk assumed, and so the reward also goes up, right? That means that there's more money in selling options here. And if I had to guess, I would be selling puts personally on GameStop. But I'm not trading GameStop. What I am trading is FUBO, and my position here is doing very poorly. Sure enough, price is dropping as StockEd had forecasted. This is looking pretty brutal. It really is. I don't have bearish continuation marked until 202, but coming into the top of this impulse wave 1 at 221 is not great. This is really not great. This could be showing a sign of a continued bearish trend, but again, this still feels corrective to me. Implied volatility tends to drop in corrective trends. So here I see implied volatility reached a high at the peak of the price action here. This would be either the top of wave C or 3. And since then, we've seen it drop, which means that the price is tending to move less. I'm hoping that we're going to get a reversal through here. But in all honesty, this is looking pretty bearish, which is, of course, boding very poorly for my options contracts. If the price can get below 2, my hedge will run into the money, and that will help a lot. But there's kind of like this area of maximum pain for my contract setup between like $2 and $2.25, I want to say, and that's right where the price is, which isn't great. We're coming towards the end of the week. I'm going to need a big bounce to really make any money here on these contracts. So it's likely that I'm actually going to be assigned the shares, which means that I'll be forced to buy at 250. Of course, I don't want to buy the shares at 250 right now because price is below there. So I'm going to be inherently holding red. Now, the premium that I received by selling that put contract helps offset that loss a little bit. But again, I only received $15 of premium, and I spent $9 of that on upside and downside hedges. Minus fees, I'm looking at about $6 to buffer that 50-cent loss. Overall, that means I'll be holding at about a $40 loss on those shares that I'm gonna have to buy. And so at that point, the question is going to be, how do I handle that? What I can do is I can buy back the put that I sold short and then sell it again into next week and hope that that contract runs out of the money. Or I could sell a different put. But what I think I want to do is I want to actually let the shares be assigned to me, buy them, and then sell a call. And what that will do is it'll let me try to run that call out of the money and just realize that premium. Really what I want to do is hold shares and sell calls. Of course, that's if the price continues to move bearishly. If the price closes near a 50-cent mark, that's going to be near a strike on the options chain. And so really, I think tomorrow I'm going to have to come to a decision about how I'm going to continue to hedge my downside losses here in FUBO. It's possible that we'll get a bounce soon, but again, the analysis here doesn't really suggest that too much. There's some suggestion that we could be coming to the end of a selling trend as volume is decreasing. Implied volatility, of course, is also coming down. And the RSI isn't at oversold, but it's getting close. We could very well come down to 202, tap it, and bounce. In which case, I don't really want to sell a call. I want to roll my put, right? That's to say, buy the put contract back and then buy the same strike at a different expiration, which I may even do to like 3 weeks out. And so I could be holding FUBO here for a while I try to pull 2% per week here. I know, it's complicated, and maybe I explain that in more detail later, but these videos get long and takes a while to process them. Let's go to PLBY. I'm also trading PLBY, and here you can obviously see we've suffered a massive downtrend. I was buying at around 160, and I was taking profits near the $2 mark at around 190. I started reducing my position, and I started to overall like hit the brakes here a little bit. Earnings came out, of course, and they were not great. Price tanked. I'm going to turn on a line chart here, get this red and green off the board. You can see that we have a nice, today's daily candle thus far really could produce a reversal candle. It's very true. There's a little upside gap through here. There's actually a couple of gaps. When I see a series of gaps, what I'm looking for is what different types of gaps. There are three, namely, that are very important. The first is the breakaway gap, which tends to occur after price has been trading through a range where there's been a lot of congestion. And so think of it as the price has been trapped and then it's jumping away and off to the races it goes. And I believe we actually did see that somewhere in here. And then the next kind of gap is called a continuation gap. And that's probably right through here. And this gap just about filled. That is to say, price almost closed that distance from that jump. And that occurs in pre-market and after hours, right? So the price moves even when markets are closed, and it creates what are called gaps. And they only appear on a candlestick chart. Watch what happens when I turn on the line chart. It goes away, right? So bear that in mind too. How you present the data matters a lot. And then there are exhaustion gaps, which I think is what's occurring right down here towards 150, where the price is now pushing down, but also we're getting to the end of the trend. If this is not an exhaustion gap, this gap between today and yesterday definitely is. And you can see price here is starting to look even a little more optimistic as I'm recording this, which is, good because I bought back in at 150. So we're 10 cents below there on 100 shares. That isn't that bad. What's $10, right? This is my long play. Now, I would like to see the price push up positively, of course, and maybe when we get towards $2, I'll sell a call. But right now, it's just not worth selling options on PLBY because the strikes start at 250, which is, of course, super out of the money. Whew. Okay, so I think I hit everything there that I wanted to, but we're going to do a little more. We're going to go look at the dollar. And we're gonna go into an hourly time frame on the line chart. I've been looking for some sideways action. I've been kind of updating this chart a little bit. We had a B wave through here. I don't think that this is a good analysis with the pennant. It's tempting though. I think rather this is some sort of flat, and we've had to push higher, setting a new high above what we saw on August 14th, which is generally pretty bullish, really. Price hasn't reached oversold yet. Probably gonna grind sideways a little bit. It's possible we re-enter this pattern back here. It's doubtful, but it's possible. It's important to be open-minded to that. And I'm going to be obviously looking for some sort of ending diagonal through here. Right. So this might be A, B, and, well, if this is actually the C wave, then it's going to form upside down and reverse. And what's terrible about this is when you have these patterns appear in reverse, they often overthrow, and this looks super bullish, and then till it's not, you know. And that really throws everyone for a loop. So we're going to be watching the dollar very carefully. Tricky Dixie, I think, is what people say. At any rate, I think this is a leading diagonal triangle for wave A flat for wave B, and we're looking for wave C to develop, which I think is inherently pretty bullish. But I'm still pretty bullish on the dollar. And so this is my preferred count. I've told you all the cautionary things, but this is my preferred count. Look at this. Is that we've had impulse 1, and you can see the RSI here reaching over bot, right? The top of an impulse wave. This could be A, B, and C of a bit of a larger flat. So I'm going to go ahead and just show that because I don't want to be too optimistic. We'll say that we'll come back down probably towards 102.779 before we see the actualization of wave 3, which will be pretty strong. Pretty strong. Targeting 104.449, I think. And we're going to clean this up a little bit. Let's see. Just going to boop, boop. I probably have the candles turned on, and that's why this extension tool isn't quite right. You can see that if that wave extends, we'll go to 105.084. This is really what I'm expecting based on the height of this impulse at the higher wave degree, at the minute degree. Overall, still pretty bullish on the dollar, which is going to be bearish for SPY. Let's go ahead and have a look at SPY. We'll go into the minute time frame here. Hey, looks like we might be forming a little bottom. This is so annoying. There's a downtrend through here. SPY broke through it and got pushed back down. But of course, we're finding some support now in the, whoa, that's not what I wanted to do, in the pre-market lows. Let's see here. Just going to take this big high wick candle there. There you go. You can see that there's some buying support there, and price is having a hard time pushing down through it. Jeez, we really could be moving through a, let's see here, another reactionary trend, an extension of a reactionary trend. So let's just open up SPY here. I followed this leading diagonal triangle through here, and I got confused. You can see I had forecasted this kind of double top, a test towards that 452 area. Well, guess what? That actually happened back here, and this downtrend I expected, oh, we got it. But it's earlier than I expected, which, of course, produced some problems in my day trading. But don't worry. I can sweaty hold a contract like no other, and I managed to get out, luckily, with even a small profit yesterday, which was insane. If you're watching the Discord, I was just like losing my mind, which is, you know, it's always fun. That's the thrill of day trading. So I had the complete wave count here with minor wave A ending at 5, and then A, B, and C. And of course, B wave is a total bitch, and so we had this sideways grind. C wave came up, and we started another wave down. I'm going to count it as A, B, and C because I want some alternation between the 5-wave impulse and then the C wave impulse. C wave impulse can form in 3 waves for a zigzag. So I'm going to call this a leading diagonal triangle. And in a corrective wave, we want to look for forms of alternation between corrective forms. Think of it as keeping everyone on their toes. There has to be a certain level of uncertainty in the markets, it seems, theoretically. And so those forms of alternation are actually pretty important. So here we have a leading diagonal triangle followed by it could be a zigzag. We easily could see a bounce up to about 44411. I'm going to go ahead and mark that right. We're going to call it right here. This is a very conservative bullish. This is an aggressive bullish reversal level. If SPY can get above whatever this is, what was that? I have the magnets turned on, so it's 44409. This is a bullish reversal level. Of course, I call it bearish continuation back here at 446. Price has since plunged below 440. This I'm going to move now down here to the previous low, and I actually want to make sure that the level doesn't extend too far into the past because I like to see when that was, right? Like now there's 2 bullish reversal levels, right? You can see that this one's an older level though. Anyway, What I'm expecting here is a bounce in SPY because it appears to me that we've actually completed a corrective trend, and now we're going to start seeing, corrective downtrend, and now we're going to start to see a reactionary uptrend to that downtrend. Yes, it's not so simple as, you know, reactionary and motive, or geez, that's so confusing. When you think of wave degrees, you really need to think of it like a pyramid. So many waves build into other degrees of waves. And so while it's true that you have 5 waves in every mode of waves, you also have 3 waves of reaction to each of those 5. And 2 of those waves of reaction, guess what? Have 5 waves. And those 5 waves, guess what? They through 2 of those waves have 3 reactionary waves. I know, it's ridiculous, right? It's very confusing. It's very complicated. Once you understand the principles of it, though, it becomes a lot simpler. I don't know how to put it in simple terms. I need to work on that. But obviously, the predicting power of Elliott wave analysis is undeniable. And when there is an error, it's definitely the analyst. The Elliott wave count probability is insane. Even when I had that reactionary trend and downtrend wrong on the chart forecasted, I was wrong in just that I had drawn that too far into the future. It occurred before I was ready for it. All right? So this is okay. I'm not too mad about that, really. At any rate, what I want to talk about are these bullish divergences here. Again, you're going to see I have a channel drawn in a 5-wave form through here, in which case I believe we're starting to see a bullish divergence form here where we have higher lows in the price and the RSI wow, this is not looking as good on the 15-minute time frame. We're going to zoom back out here to the hourly time frame, and you can see how much the time frames matter there too, right? You've got to be careful. You want to make sure that you're doing your wave count on the relative time frame that matters. Let's see. So here you can see we have higher lows on the hourly, and the RSI is also setting higher highs. Let's see. What? Shit. It's right here. This is the bullish divergence. Lower low, and then a flat RSI, and then we get this big push up. Jeez. Okay, so maybe the 15-minute was the right time frame. I must have been drawing this. And then I switch time frames in the middle of it. Don't do that. You'll get confused right here. You can see the RSI is totally flat through here. It's not dropping below 32. Meanwhile, the price does, right? So that's probably the end of wave 3 through there, all right? And now we've got 4. Good. We're looking for wave 5. And wave 5 could be super truncated. That could be the end of wave 5. I wonder if I should be expecting another spill down. It's possible, right? It's possible. But I'm still optimistic we're going to get a bounce through here. After all, I think on the minute time frame, what we're seeing is the early signs of that. Yeah, look at these big greens. There we go. There's that bounce. Now, the moment of truth really comes right now because we're about to see the RSI reach overbought. If this is a reactionary or corrective uptrend, it'll tag overbought, which it already has, and then it'll just turn around and head south again. You can see the bearish continuation level here is serving as support. Price is starting to bottom through here. This is definitely an inverted head and shoulder through here, absolutely. Where we have the shoulder forming here. There's the armpit. And then we have 2 heads, which is fine. You either get multiple shoulders or multiple heads, not both. And now we've broken that neckline through here, and price is pushing above it with a lot of strength. If this is a true motive trend, what we're going to see is the overbought level hit multiple times. Otherwise, we're just going to see the reversal occur. Right now, what we're looking at is a very bearish candle at the top of that little pop. Right? You see this wick? This is very tall. Price pushed through here, and then you can see that volume came in at this higher price, and that sent the price lower. However, we didn't quite even begin to totally retrace this prior candle. So this is still looking pretty bullish. There's a lot of volume there. There's resistance there. If this candle gets through that range, then expect the price just to fly because guess what? The buyers overtook the sellers. This is drama. This is absolute stock drama. Once you learn to read candles, the day trading gets a lot better. Right now, I'm holding a lotto call. In fact, let's just open up the spreadsheet. Let me just make sure that looks okay. Looks good to me. All right, so this is what I've got going on. The FUBO trade up here is not doing very well. And I'll take care of that tomorrow and I'll update it. I've got my account segmented into 3 portions. The long position, which is PLBY, the theta position, which is currently FUBO, and then my day trading position, which is like my revolving cash that I use to trade 0-day expiration SPY options like a degenerate, as they say. And so far, so good. Like, really, I'm surprised. Like, when I highlight my profit, you can see that we've been in a downtrend, but what have I been trading? Calls. I've been trading calls. Because I'm expecting a bounce, right? Like, what a loser. But guess what? I'm also making money here, which is also like ridiculous. Like, I can't even. Like, I should be trading puts. I'm trading calls. And even if I don't make any money on this what I call a lotto call, the sum is still $10.90, and that's after fees. I'm still positive $10 here, which is my 2% target. And I can't even, like, my day trading is so wild. And if the day trading outperforms the theta position, like, that just doesn't make sense to me. like it shouldn't be like that. But if it is, hey, that's fine. If I'm making money, I'm making money. If I highlight everything here, it looks like I'm still up $16. Not so bad. So we'll see how this 444 strike call does today. Again, I'm thinking that we might get a pop higher. This is looking good. It's looking good. If I can take profits on that call early, I will. After all, it probably will expire worthless today, and so I'll just need to close it out before the end of the day. If I had to give like an upward target for the corrective bounce through here, geez, it'd be hard to say, but that 44409 level looks really good. And so I would just kind of expect SPY to rip for a little bit. You know, this candle's coming in nice, which is good. Okay, see what I'm saying? These videos get way too long. What is this? 26 minutes? I don't know if I'm gonna have time to process this before work, but I'm gonna give it a go. Happy trading.